Good afternoon, everyone, and thank you for joining our intermediate royalty panel at the CIBC Western Conference. My name is Allison Carson, and I'll be hosting the session today. So today with us, we have Dan O'Flaherty from Maverix Metals and Vincent Metcalf from Nomad Royalties. So before we get into a little bit of Q&A, I'll hand it over to Dan, followed by Vincent, to make some opening remarks about their companies. So with that, Dan, over to you.
Thank you very much to CIBC for hosting, and thank you for everyone to take some time to listen about Maverix and Nomad here. We are a precious metal royalty company, and on the first slide, it gives a little bit of a snapshot of the company, which I think is on the next slide, please. We do have a market cap of just over $600 million US. We are a precious metals royalty company with 122 royalties, 14 of which are currently cash flowing, and 99% of that revenue comes from gold and silver. The royalty model is a very high margin business with 90% gross operating margins. It's highly diversified as well, with not for Maverix, not a single asset generates more than 15% of our operating cash flow or net asset value. So very much spread out from a diversification point. And we do have some very large shareholders in the mining sector on our registry, highlighted by Nomad, Pan American, and Kinross as major mining partners that we have on our registry. So we will just flip to the next slide here and talk a little bit about the portfolio itself. It is very global, with a high percentage of our cash flow coming from Canada, the United States, Australia, and Mexico. Particularly in the bottom left, you'll see a number of assets in the Western United States, which makes up the future growth of the company. So it is a very much mining understood historical jurisdictions that we have our asset base on. And just going to the next slide, it has a little bit of a summary of the company. As I mentioned, 99% of our revenue from gold and silver, so very much a precious metals focus. I did talk just very briefly about the jurisdictions, but again, Canada, United States, Australia, and Mexico, that is where we've historically been investing and deploying our capital, and that's where we would continue to deploy our capital very much. In terms of the actual assets, it is a mix of royalties and streams, and just a high level kind of comment on the royalty model. It is a percentage of top line revenue, and that's top line. It's not after costs, so it really is a high margin business. Just getting that cash flow, and in terms of kind of the simplicity, we do have a lot of operating assets, and we also have a number across the development spectrum, whether it's near-term development, long-term development, whether it's some exploration projects. We do have exposure across that portfolio, and as the royalty model is once we've made that upfront initial investment, we get all the benefits of our underlying operating partners investing in those assets, and for the benefit of their shareholders, but we get that benefit as well at no extra cost. And this is a particularly strong benefit to the royalty model in an inflationary environment, because our costs are essentially fixed and they don't go up, which is a very strong benefit for our shareholders. And you'll see it at the bottom of the page here is we do have royalties on a number of very strong operating partners across the industry, and this is something that we've benefited from, and as we continue to grow, something we'll continue to focus on. And actually, just touching on our acquisition strategy, which is on the next page, we are focused again on lower risk assets in good jurisdictions with high margins that deliver great returns to our shareholder, and we are focused on per share metrics. Management has a very strong ownership, insider ownership of the company. So we do look at things on a per share metric. Obviously, on the bottom right, you'll see a demonstrated focus on ESG. This is becoming a much bigger focus as we look at investments and who we're working with as our operating partners. But I think just given the track record that we've had in terms of growing the company over the past 5 years, we've grown consistently every year in a very straightforward model, and we're going to be continuing to do that going forward. And actually, just on the next page, it does talk about the track record that we started with when we launched the company initially in 2016 with very humble beginnings of just over 1,000 GEOs, gold equivalent ounces attributed to Maverix. We've grown that consistently every single year. And we've now had a guidance last year of just over 30,000 GEOs. We do expect to exceed that when we're able to announce our results for the year ended 2021. But looking forward, this is what we're very excited about. We do have a lot of exposure to near-term assets as well as to longer-term assets. And without getting into the specifics of every single asset, we see, again, mostly in the United States with very strong operating partners. And this is optionality, significant exposure to assets across the board. And just moving ahead to the next page in terms of what our catalysts are going to be going forward. We have grown very substantially on the asset portfolio. We haven't grown the capital markets profile as much, and that's going to be a focus going forward. We have listed on the New York Stock Exchange. We're also on the Toronto Stock Exchange and the ticker MMX. We recently were included in the GDXJ index, and I think future indexes as we grow the company will be further catalysts for growth, very specifically the GDX. So I think there's lots of upcoming good news, I would say, for the company and its shareholders. And I think that's really what we look at Maverix as exciting as bigger companies tend to trade at much higher volumes and valuation multiples, and that's liquidity and diversification. And we're well on a track record with a proven track record of growth, but to continue that track record going forward to add new assets into the portfolio. We do have a very strong balance sheet with over 160 million of available capital to deploy into new transactions. And we're very, very busy at the moment looking at new deals, as I'm sure Vincent is as well, and he'll talk about that soon in terms of the opportunities to continue to grow in the sector. They're very plentiful at the size range of companies that both Maverix and Nomad are at, being $1 billion and sub $1 billion market cap. It's actually a silly anecdote, but it's much easier to grow a portfolio of that size versus some of the much larger peers that have $10 billion market caps. It's a little harder to grow there, but there's lots of opportunities for us to continue to grow the portfolio, grow the capital markets profile, grow the trading liquidity, grow the institutional and retail shareholder base, and we're really looking forward to it. And it's I went through the slides very, very quickly because it's a very straightforward story. Cash flowing business, gold and silver, extremely high margins, and it's a very scalable business. We have under 10 employees, and we've grown from, again, just launching the company to approximately a $600 to $700 million market cap, adding 122 assets into the royalty and streaming portfolio, 14 of which are paying, and it's a good place to be. And I think I'm very happy to answer questions. And sorry for going so quick, but it is a simple, straightforward, cash flowing, high business, gold and silver business model.
Oh, that was great. Thanks, Dan. We'll quickly pass it over to Vince, and then we'll get into some questions afterwards.
Great. Well, thank you very much for having Nomad again at the CIBC conference. This was probably our first conference since the creation of Nomad last year. So we're very happy to be back 12 months later because 2021 was a big transformational year for us. We've executed on 2 new streams, which we didn't have any original streams, I would say, that we had started with when we first started Nomad. So last year, 12 months ago, that was one of the main things we told the market and you were that, our main focus was to execute on stream. So very happy to accomplish that. But, when we're going to go through the presentation, you're going to see that, where we started, 18 months ago as a new company and where we're at now, things have shifted and evolved a lot, and we're obviously very happy now to be in the position we are. There's a tremendous amount of growth in front of us, and with very, very quality operators. With the recent acquisitions that we've done, we're talking of counterparties like the Ivanhoes, the Equinox Golds, the Maverix. So these are very, very top, the top operators, either on the base metal side or on the gold front. So very happy to be associated with, projects and streams on projects like those. So if we skip to the first slide, next slide, please, you'll see a snapshot of Nomad today. So, yes, we, deployed $225 million, or at least we transacted on $225 million of deals last year in 2021. But as we sit here today, our market cap is still only $445 million. So it's a very small base, but when we're talking about growth and re-rating potential, I think there's definitely a big opportunity here as the market realizes the value and the quality of the deals that we've done. We started, in 2020 with $30 million of revenue. That should be very similar this year. And the interesting thing is when you look forward to 2024 onwards, you're looking at $50-70 million of cash flow just with the stuff that we already have in the portfolio. So tremendous amount of growth coming. We are returning capital already to our shareholders. We're paying a 2.1% yield at the moment. We've now paid, I believe, 6 or 7 dividends since the start of the business. So very happy on that. And, it's a sustainable dividend. We've got by far the highest dividend in the sector, and that's something we want to build on. We are, management are big owners of the business. We believe in our business. We're actually buying stock in December and January. We actually just completed an equity deal this morning where we introduced new shareholders to the story, large institutional funds out of the US and Europe. So very happy to have that closed this morning. And that's going to help us, deleverage some of the balance sheet. We talked about the transactions that we did last year, $225 million that we've deployed. We have used our credit facility to buy some of those assets. So with the funds coming in today, we will pay down some of the debt. We have 17 assets, 8 of which are already in production at the moment. We started with 4, so we've now doubled the producing assets. And as we go forward to 2024, that will increase to 12, 13, 15 assets. Next slide, please. So we've talked about the evolution of Nomad. So we started the business in 2020 at the beginning of the pandemic. We were still in a pandemic, but Nomad shifted its focus a lot. And I think, the important thing for us is that we're looking to the future. So we're now at a certain stage which we call Nomad 2.0, but it's really looking at how do we create an even better business for Nomad. And that means making it a more liquid stock, bring new investors. So the deal that we finished or that we closed today was actually a very good step towards that. But it's also keep on diversifying the portfolio and keep on adding assets and make the I would say the volatility of the stock and the portfolio be at a minimal while optimizing exposure to gold and silver. Those are our key focus for the business. Next slide, please. So we've talked about the, what we've done and, since the beginning. This is I would say a good place to start. So we've done a lot on the corporate front, but most importantly are the deals that we've done, especially in the last 12 months. The last quarter was very busy. We announced a Greenstone deal and also the Ivanhoe deal on Platreef. So those are 2 very significant projects for us. They are, basically tier 1 assets that have mine lives of over 25 years with great, great operators, and they're new mines. So these are project financing situations where we're coming in as a financing partner, and those mines are fully permitted and now in construction. So we have a strong visibility on cash flow within 18 to 24 months, depending on the mine build. So these are top assets that typically don't come around a lot, but we had the possibility of transacting on this, and also with the help of our largest shareholder, Orion. It does open up some doors, which we're obviously very happy to look at certain situations. But obviously with that alliance of that we have with Orion, obviously facilitated the entry of some of these deals for us. So very, very happy with that. So on the corporate front, we just listed the business on the NYSE main board. So very happy to accomplished that last year. So I think 2022 for us is going to be a big year in terms of seeing that re-rating potential hopefully crystallize, because we strongly believe that we're somewhat undervalued at the moment. But with what we've done last year, with, I would say, limited financial capacity, I think there's a lot of great things ahead of for us. Next slide, please. So in terms of one of the, I would say, innovations that we've done, especially on the Greenstone deal. So Greenstone is a $95 million investment from Nomad into the mine, the Greenstone gold mine, which is operated by Equinox Gold. It's going to be the 5th largest gold mine in Canada. And one of the novel things that we've brought to the royalty and streaming sector is the fact that for the first time, through the streaming instrument, we've actually included a direct component in terms of redistributing some of the proceeds that we receive from those instruments back right into the mine site and right into the community. So what that entails is for every ounce that we're going to be receiving from Greenstone, we're going to be reinvesting $30 an ounce right into the community, whether it's through environmental programs, educational programs, social programs, but really to benefit the stakeholders around the mine. So what that represents is going to be around $350,000 a year for the life of the mine. So these are very significant amounts that we as Nomad, we're going to be distributing to various programs in the community. And I think that's truly, one of the main innovations that we're going to see. And hopefully it catches on to some of our other operators and other streamers in the sector, because I think that could be a big game changer for the mining sector in general. Next slide, please. So we're not going to go through every single project because we have a short window here. But what I would say is that for us as a vision for Nomad, the most important thing is to keep diversifying. We started with 9 assets. We're now at 17 assets. And, we're not going to any of the very, very risky, I would say, jurisdictions. We like mining. We like mining cultures. So that's usually the most important thing for us from a due diligence point of view is making sure that the host community in which we're investing wants the mine, because that's the easiest way to see a project blocked or derail. So that's important. We're going to look at different jurisdictions. However, if the host community wants the project, if it makes a direct impact to that community, that's the first step. The second step is making, once we think it's a good project, is making sure that from a resource point of view, the deposit works. Because you can invest as much as you want on a deposit. If the deposit, once you start mining, doesn't work, well, that's not money well spent. It's never going to work. So making sure that the deposit from a geological point of view works, that's the most important thing from a technical point of view that we look at. And when you look at where we've invested, these are very large deposits. So the last 4 acquisitions that we've done that are run by Ivanhoe, so Platreef, Robertson at Barrick, Equinox with Greenstone, and JX Nippon, which is running Caserones. All 4 of those assets have mine lives at the moment, pretty much over 14 years. That's the shortest one, which is Greenstone based on reserves. But when you look at the resource conversions, you're looking at 25 years plus for every single one of those 4 assets. Those are assets that we did not own 12 months ago. So it's changed the profile of Nomad, and they're all top tier operators. And they're all new mines, pretty much. So JX Nippon is already in production. So Caserones is already in production. But Ivanhoe, Robertson at Barrick, Robertson that's going to be building, Barrick's that's going to be building Robertson, and then Equinox that's currently building Equinox. Those 4 mines will be three mines will be in production by 2024. So there's a big growth profile for us. They're all fully financed. They're all fully permitted. So obviously for us, it's changed the profile for Nomad in the last 12 months. And I guess on that note, I'll stop here and have Allison ask questions.
Great, thank you both. So just getting into some of the Q&A. So recently, we've seen a lot more junior and intermediate royalty companies sort of coming into the space. And I'm wondering, what role, if any, do you see consolidation playing in the royalty space, and why? Maybe Dan, I'll start with you.
Sure, that's a great question. We get asked that all the time. I think one of the comments that differentiates, I'll say, a Nomad and a Maverix is that we do have a lot more critical mass and scale and financial capability than a lot of the newer entrants, and that is very hard to get done and get started. And Vince, congratulations on your equity financing this week. Very well received. And I think in terms of the differentiator, I think it's really size, scale, and track record, which is hard to grow. And each of the companies here have done that. In terms of consolidation, again, I think we're going to see more of it. Right now, there are a lot of opportunities to deploy money directly into mining operating companies. So that's typically been, historically speaking, royalty companies have tended to consolidate when there haven't been deals to do, and there have been lots of deals to do. So that's probably the one thing holding consolidation back. But it certainly makes sense that larger companies trade at higher multiples, have more liquidity, greater diversification, greater index inclusion. So personally, I see consolidation coming.
Right. And Vincent, anything to add to that?
Yeah, I mean, I would also separate kind of the royalty business in two different buckets, in the sense that you have the mid caps, which Nomad and Maverix are part of, and then the seniors. And then you have the juniors, the really junior companies. And I think they're two very different businesses. At least for Nomad, we're focused on cash flow. And I know most of our peers in the mid-cap space and in the large space, cash flows is the important metric. So you could look at optionality and, long-term dated royalties. You could put any type of NAV you want around those things. So that's sometimes where the junior space is hoping they get value through their different shareholders. But for us, when we're looking to attract a large generalist, we want a very simple story. We want to talk about cash flow. We want to talk about, growth over time. So it's something that the small junior company. So will there be consolidation in that end? Probably. Because truthfully, if you don't have any cash flow and you keep building businesses and you have these big management teams, you have to pay, big amounts for those management teams. I think Dan said they're 9 employees or so. We're 6 employees at Nomad, so it's a very small team, but we manage to grow a lot. But I think, yes, I agree with Dan. I think there will be some type of consolidation within either the mid-cap space or even the senior space. But, I think we'll do whatever is best for the shareholders in terms of Nomad. But I think we understand that bigger is better now for a lot of these larger funds that are looking for increased liquidity and, increased scale. So we are focused on per share value, but at some point, maybe it does make sense to look at other alternatives.
Great. Just switching gears a little bit, because both of you touched upon this in your presentations. ESG is becoming a larger focus for companies and for investors. I was just wondering what you think the major ESG risks for your businesses are in the next couple of years, and then maybe longer term as well. And Vincent, you want to start with this one, maybe?
Yeah, well, I think, ESG is, I think that the most important thing is making sure that, we're doing the right things for the communities and, for the world in general. So that means, and I think I've touched on it in the sense of what we do when we look at due diligence. Well, we want to make sure that we're making a difference for that host community we're investing in. And I think that's one of the major things, because that is a risk. If you invest $100 million in a stream on a project and that community decides that you're not, in line with what they believe should be done, well, it's going to be a problem. So I think that's one thing. And then I would say in general, obviously as a macro point from a vision, like we want to be, good corporate citizens. So we want to make sure that we invest in projects that, are up to standards and are looking at, neutralizing carbon impacts and whatnot. So that's something that for us, when we have, and Dan mentioned, there's more and more opportunities right now in the sector. So we have a lot of things to look at. So investing in the better, projects, I think that's very important for us.
Yeah, I'll echo all those comments. If one of the questions was, what are the big challenges? One of the big challenges for royalty companies is that we don't actually operate our underlying mines. Our operating partners, do that. So when we're making an investment decision, there's a lot of due diligence up front on who our operating partners are going to be, and that's why it's been certainly a big focus for us and Nomad, as well as choosing the right, biggest, strongest, good corporate citizens as our operating partners, because that's all upfront due diligence.
Great. So another question is that, both of you have been quite active in terms of deals over the last year. And I'm just wondering how you see deals evolving as they kind of relate to pricing, availability, competition, and, maybe what impact, if any, do you see commodity pricing having over the next year?
Well, that's an interesting one. Vince, do you want to start?
Sure. Well, I mean, in terms of, I would say that, Nomad, we've been around since 2020, but as a management team, we've been involved in the streaming space since 2014. And I don't think we've ever had a very calm period. And I would say that 2022, or at least the end of 2021 and 2022 is definitely not calm. And I think for both Nomad and Maverix, we are in a very different situation than maybe some of our larger peers. We don't need to deploy $500 billion a year. I mean, for us, last year was a big year. We did 225. If we did half that this year, we'd be happy. Because when you're looking at a base, we have a market cap of $450 million. So if we do one deal of $100 million, that's got a very significant impact on Nomad today from a per share value and from a size value. So I would say that we could choose and we could just focus on the right projects, because for us $100 million investment is actually a pretty large investment, whereas if you look at the Francos and the Wheatons, they need to do a lot of those. So we're not in a rush, and when you look at the growth perspectives for I would say mid-cap companies, I think they're much better than some of our senior peers because of that, because we could have one or two deals and have a tremendous amount of impact. When you look at our 4 deals that I've talked about, those 4 deals for us are going to represent, so Robertson Platreef, Ivanhoe, and Caserones. Those 4 deals for us are going to represent over 30,000 GEOs in 2024. So that's twice what we got last year. So that's very significant. So I'll let Dan maybe comment.
Yeah, no, that's exactly right. In terms of being able to move the needle, certainly it's a lot easier for us to move the needle. And when we look at types of royalties or stream deals, there's no one type of deal. In terms of oftentimes when commodity prices are high, people are excited. They want to invest in new assets. What more projects are moving forward, and it becomes more of a growth investment where a royalty becomes part of the capital of expansions or new mine builds. And then in more challenging commodity and prices, equity windows tend to not be open to provide capital. So there's a lot more debt restructurings or working capital transactions. So it really, in any part of the commodity cycle, there's room for royalty companies to be part of the capital structure.
Right. We only have about 2 more minutes, so I wonder if each of you maybe just want to highlight one asset that maybe the market hasn't paid as much attention to in your portfolio, but maybe should be over the near term. Dan, maybe start with you.
Sure. Well, I'm going to mention 2, so it's kind of cheating.
Sure.
But we're very excited about Camino Rojo coming on stream right now. That's a project in Mexico that's being built by Orla. They're doing a tremendous job of getting that into production, and that's going to be a key cash flow contributor to us going forward. Another one that's a little under the radar is a company called Montage. It has the Kony project in West Africa. This is the former Redback team, which ultimately sold to Kinross about 10 years ago. So a lot of success in terms of that team and their ability to deliver ounces. So those are probably 2 that I'd like to highlight.
All right, and Vince?
I would say that, the one that people still don't talk a lot about is probably Robertson, which is operated by Barrick, and it's within the Cortez complex. So, it receives some good news once in a while, but I would say in 2021, it's received a lot of good news. And I think it's slowly coming to the forefront in terms of one of the major assets within the Cortez complex. And I think that's one of those assets that could become another tier one for any type of royalty company because it's got that big scale potential of being multi-million ounce deposits. They're already saying it's around 4 million ounces, probably going to be larger than that. But that's going to be in production very shortly by 2024. So very, very much looking forward to see how that one develops, because Barrick doesn't build small mines. So if they're focusing on that, it means that it's got some very good potential.
Perfect. Well, we're just about out of time here. So I want to thank everyone for joining today. And I especially want to thank Dan and Vincent for their time. Sounds like you both have an exciting year ahead. And so we look forward to keeping track of you guys.
Well, thank you for having us.
Thank you very much.
Thank you.